Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin, starting on the weekly time frame with the bullish scenario, where we're looking for a 5-wave impulsive structure to the upside to finish wave 1, preferably a sharp, quick corrective structure in wave 2 before then continuation to the upside to take the all-time highs and move towards 100k. In this scenario, we're then looking for a wave 4, where the most common target for wave 4 is between the 302 and the 05, which is between 39.8k and 37k, with the invalidation being 34.1k. Preferably, this wave 4 is ending after the 0.382 fib time, taken from the high of wave 1 to the low of wave 2 to the end of wave 3 over here, to compare 2 in time with 4 in time, and the 382 is sitting in the week of the 4th of March 2024, and the 1-to-1 that I have on my chart here is the 10th of June 2024. Now, based on the potential target of this wave 4, we can then get a bit of an estimation for the high of this wave 5. The most common target for a wave 5 is between the 1.236 and the 1.618, taken from the high of 3 is in over here, to the low of wave 4, and I chose the 0.5 at 37k for this particular pool, which then gives you a target area here between 52k and 56.5k. After this, we then want to see price moving towards the downside, and the green fibs that you see on the chart over here are taken from the low to the 1.618, giving you a target area here sitting between 36k and 24.2k. Now, this scenario is very interesting in confluence with these volume profiles. This volume profile is of the range in 2021, and as you can see, we spent pretty much a year in this range. So for me, the probabilities are very low, also from an Elliott Wave scenario, that we just bump through this area to all-time highs without spending any time in this range. I think the probabilities are much higher, also from an Elliott Wave perspective, that we're going to spend some time in this range in 2024. You can see the value area highs over here. That area has been tapped, as you can see with the wick that we have to the upside, and at the low we have an important area sitting around 30k to 32k, which is a very interesting support resistance area, but also has the value area lows of the 3 different volume profiles that I have on my chart. Another thing that I think is very interesting is that we have a monthly gap which is touched for the second time. On the chart, you can see that price made the all-time high candle, moved to the downside very quickly, started a local range, but this candle here has a little bit of a gap. This gap has been tested for the first time before then rejecting to the downside. That is exactly what you like to see. However, when you retrace back to a gap for the second time, it increases the probabilities to fill the gap to the upside. And that is why I wrote a second touch, which means this candle over here on the monthly has touched this gap for the second time, which does increase the probabilities that price will fill this gap to the upside, where the target to the upside is 53.3k. An alternative bullish scenario is a double 1-2, where the first wave 2 retraced to the 382 Fibonacci, and preferably the second wave 2 is a more deep retracement to the 0.5 to the 786, as the 382 is less common for a wave 2, but this is the common target area between 37k and 30k, where this wave 2 preferably ends after the 0.382 taken from the high to the low put on top of the high we have over here, which then gives you a target after the 19th of February 2024. So this move could be much quicker, but it still means you're going to spend some time in this range. However, you're going to spend less time in this range, as after 2 you expect a big impulse to the upside for wave 3. Of course, we also have the bearish scenario, wave A, B, C, wave B retracing to the 382. This is a common target for B, less common for 2. That is interesting. Then we have the target area for wave C, which at the moment is respected, and this is the most common target area. You can see that the 1 to the 1.236 trend-based fib extension, taken from the low to the high of A to the low of B, on the weekly chart is very nicely respected, with no candle closes above the 1.236. However, it is no problem for a wave C to move to the 1.618 at 50k. In this scenario, we also expect price to still range in this range over here for a longer period of time. Not straight to the downside towards the 10K area, but still moving in this range, we get more information to assess the probabilities between these weekly bullish and bearish scenarios. If we go to the lower time frames, then this is the bullish but then eventually bearish scenario, as we are looking for a wave 1, 2, 3 or an ABC to the downside. But what makes this scenario a little bit more bullish is that we're then looking for a flat structure in an ABC in wave 2 or wave B, which therefore means the low over here is not going to be all the way down here, because we are currently ranging on top of the most common target for a wave B and an expanding flat ABC. So taking this low is no problem, but you want to have a quick bounce towards the upside and price not moving all the way here, right? That would be more bearish. We still expect a bounce to come eventually, but it's not going to be this particular scenario. Now, your most common target for B is the 382 to the 886, which is between 44.3K and 48.2K. Common target for 2 is the 05 to 786, between 45.3 and 47.4K. What lowers the probabilities for this scenario at the moment a little bit is the vertical lines on the chart. These are fib times taken from the high to the low of 1 or A. If we are looking for a wave 2, then preferably the end of wave 2, meaning then the end of a flat, is made before the 5 fib time, but that is of course extremely unlikely. A wave B, however, can be a lot longer, so if we do get a flat structure to the upside, the probabilities will be higher. We're looking for an ABC in this scenario instead of a 1, 2, 3, which eventually on the 12-hour daily weekly time frame means that the probabilities would increase for price to take that high sooner or later. And this is the flat scenario that I was talking about. Here we have a 3-wave structure to the upside in wave A, and we are then looking for a zigzag to the downside in wave B, where wave A is already finished. Wave B is also finished, and we are looking for a 5-wave structure to the downside in this wave C. This is your most common target area over here for a wave B in an expanding flat between the 1.236 and the 1.38, taken from the low to the high of A, which is where price has found support. The 1.618 is also still a target at 40.1K. But if we take the low, we do want to see a quick return towards the upside to look for this wave C. And if we do look towards the upside, we also have the daily gap over here. And if price is going to move above this key level, then the probabilities are high that price is going to fill the gap to the upside to 45.5K. And just above the gap, we also have this blue resistance box between 45.9 and 46.7K. If you go to the bearish scenario, then we are looking for an impulse to the downside. 1, 2, 3, sideways 4, and now a wave 5 to the downside. In this scenario, you want to see this low over here being broken and price to move to deeper levels, where inside this wave 5, we are looking for a wave 1, 2, 1, 2, 3, 4, 5, 4, 5 for lower prices to come. Something you definitely don't want to see is price hitting the 0.618 at 42K. If price would move to the upside now and hits this level, it would invalidate a low time frame wave 4 over here and increases the probabilities of that flat scenario for price to move towards the upside. A support area that is important for this wave 5 are the two lows that we have over here, with the lower low sitting at 40.1K. But really, if we look towards the downside, then we have the yellow box here between 38.6, 39K, and some blue boxes 37.7 to 36.4K. On the lower time frames, this is then what you are looking for, right? We want to see an impulsive structure to the downside. Wave 1 finished, 2 finished, and then you want to see another wave 1, 2, 3, 4, and 5. After wave 5 in white is in, we then also finish the blue wave 3. We're going to then be looking for a blue wave 4 and eventually another low to be made in 5. So the probabilities therefore would be higher for price to move towards that yellow box. But what you also see on my chart is a fib time, and this is a fib time that compares the white wave 2 with the white wave 4 over here. Preferably wave 4 is already in. If price is going to move above this high over here, it decreases the probabilities that this is a white wave 4 just because of time. If you take a fib time from the low of 1 to the high of wave 2 and put it on the low of 3 to compare 2 in time with 4 in time, preferably a wave 4 finishes before the 5 and the 6 fib time. But of course, if price would move up, that is not the case, lowering the probabilities for a white wave 4. In that case, the only potential bearish scenario that is left is that we then have a potential blue wave 4 over here. So we have to compare blue 2 with the blue wave 4. Take a trend-based fib extension from 1 to the high of 2 to the low of wave 3, and now you can see we are only at the 1-to-1, which is perfectly fine for a blue wave 4. However, taking this high does marginally increase the probabilities for the flat scenario, because of course at 42k we also have the 0.618, and if we hit it, it increases probabilities to move towards the upside. If you look at the CVD divergences, then the bullish CVD divergences already played out nicely as price took the high, but we do have some bearish CVD divergences more locally here, lower high on price, higher high on the CVD. And what is interesting is this red line. This is very, very rare, but on the Coinbase chart here, I have a higher high between this order block and the candle over here. However, on the AGGR chart, between this high over here and this high, it is a lower high, but I do have a higher high on the yellow CVD line, which means there is a bearish CVD going on over here, which is relevant because with CVD divergences, the AGGR chart is leading and not the chart that I use over here. And if we then look at the probabilities of the different scenarios, then on the weekly time frame, the probabilities are a bit higher for price to still take out this high at a certain moment, because we have a second touch of the monthly gap, but also the end of this impulse from 24.7k is really awkward. It looks like either an expanding diagonal or maybe a corrective structure, and that is not really what you like to see. But of course we remain very, very, very patient, because in the end the counts and structures on the lower time frames will decide what happens on the higher time frames. If we then look at the lower time frame scenarios, which is basically what happens over here, then the probabilities are neutral between the impulsive scenario to the downside and the flat scenario. We are currently ranging in the most common target area for a wave B. There is still enough probabilities for a flat as well as for an impulse to the downside, so we remain patient and look at the 0.618, right, which I wrote over here as well. For a flat, the probabilities increase if the 0.618 is touched at 42k before taking the low. If price takes the low, we have to take the 0.618 Fibonacci from the high to the new low, which means it's going to be a little bit lower. Also for a flat, what is important is that if price is going to take the very, very, very local high over here, the probabilities marginally increase for a potential flat, because price gets so close to the 618, and also because of fib time, right? Because this range over here is then very long to the wave 2 that we have. On the micro, however, when we really zoom in to the 3-minute time frame, the probabilities remain higher for price to take this low, just because this retracement over here went to the 886 Fibonacci, and the 886 Fibonacci is a rare target for a wave 2, but a common target for a wave B or a wave X. Increasing the probabilities, the bounce to the upside is a corrective structure. The probabilities do go down for price to take out this low if it can move towards the upside, and especially if it hits the 0.618. I hope that this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.